Good afternoon. It's Brian Shannon from AlphaTrends.net. Today is Thursday, the 23rd of October, 2008, and we had another very volatile session in here today. Saw a little bit more volume in here once again. So that's 2 days in a row that we've seen big volume. And yesterday I pointed out that the big volume came at the end of the day, and today we saw the same thing. The market kind of chopped around early morning, and then we saw a nice sell-off here, lower highs and lower lows, just pushing it consistently lower. And then the market came back up to that VWAP with some heavier volume, consolidated a little bit in here, and then we saw another volume push higher late in the day. So that's 2 days in a row that we've seen very heavy volume in the last hour of the day. Yesterday it was actually about the last 20 minutes or so, and then today we saw it was actually more about the last hour or so that the sellers showed, the buyers came in and pushed this market back up. This gold line here is the 2-day VWAP line for the SPY, and you can see that the market is holding above it. It tested it at that $90 level and then pushed higher. So that's where this little pullback came to, was actually the 2-day VWAP, and here we are again above the day's VWAP as well. We obviously continue to be in a horrible bear market. The S&P 500 did not make a new low today, but the NASDAQ 100 did. We still have lower highs and lower, and basically maybe some support forming in here is the best way that you can look at this action on the daily time frame. But we're going to need to really clear this level before the upside can be taken seriously, for any longer period of time other than, maybe a couple hours or a day or two. This level obviously is going to be important as well. This is the level the market gapped down to yesterday, and it's going to be reinforced, I think, is a more important level because that's the declining 5-day moving average in here. Perhaps we get some weakness tomorrow and create a right shoulder that can continue to help push this market higher. Don't try to read too much into a rally scenario here, because the market is still clearly broken, but it's encouraging that it's not breaking down further in here, and the late day volume is also something that's encouraging here. They say the pros, buy the close or act on the close, and what's a professional these days in the market? Basically anyone who's still left to trade, I guess, is a professional, because so many people have been wiped out in this environment. Let's take a look at the Russell 2000. The Russell 2000, we saw this market lose 3% today. It didn't quite make a intraday new low, or let's verify that. The intraday low was 46.51, and today we saw 46.68. So it didn't make an intraday new low in here. It's obviously still a very damaged market. Looking at that 30-minute time frame, let's change the scaling in here. So looking at the 30-minute time frame, we had been looking at this trend line that held yesterday, but obviously that got destroyed right on the open, and the market came down and tested these lows. We still have the pattern of lower highs and lower lows. In particular, when you look at the 10-minute time frames, probably it's going to have to break at least back above 50 to change this downtrend. And here's this little trend line as well on the 10-minute time frame. Looking at a 5-minute time frame, we can see that again, yesterday we saw the big volume at the end of the day. Today we saw a big volume at the end of the day. On the 1-minute chart of the Russell 2000, it wasn't quite as bullish as the S&P 500, but it did push it back up above the daily VWAP in spite of the 3% loss. The average price that this market traded at today was at about $48.70, and here we closed at $49.08. So slowly there's slight encouraging signs under the surface of the market beyond the net price change at the end of the day, but not something that you want to be an investor. You don't want to invest based upon that. Gold continued lower down today, $1.06 as far as the GLD, and again, this is a broken market. It's got a declining 200-day moving average. I think you want to look at rallies in here as guilty till proven innocent. It's interesting how they, how the 50-day moving average was declining the whole way in here, and this is, if you remember, the biggest one-day gain ever. I think it was, some clever distribution where they pushed it back up there and had basically 3 weeks to quietly sell before it got pushed lower, whoever they is. But a lot of people like those conspiracy theories in the market, especially the the people who love gold, known as gold bugs. The USO, the oil was up a little bit today, up $1.67. It's down in this area again where you would expect to find some support, but again, not reason to buy in that $55 to $60 level. So perhaps the selling. Perhaps the worst is over, but it's definitely not a reason to be a buyer in here. We're still below a declining 5-day moving average in spite of a 3% rally in the USO today. So no reason to be a buyer. So don't get excited about these headlines about OPEC and how they're going to do stuff. No one is bigger than the market. OPEC's not bigger than the oil market. U.S. government isn't bigger than the equities market. They can influence things for short periods of time, but when there's sellers in the market, those sellers are going to come back again and again and again, and that's what we're seeing. In the financials, they were down 20 cents today on the XLF. Again, 17 to 18 is the biggest level, hurdle for this market that is going to have to clear before we can see some follow through on any upside rally attempt. We have this level that it broke down from and was acting as resistance yesterday late, and then here again today. So this little level is going to be important for the very short term. We still remain below a declining 5-day moving average, so don't get too excited about any upside scenarios based on 1-minute time frames. These are good for scalps, and here we saw a real nice volume come in here in the last hour of the day. We saw this big volume right here, followed by consolidation under the daily VWAP with lighter volume. I think people were looking to see if the rumored margin clerks were coming back to sell, and in the last 15 minutes appeared that the margin selling wasn't coming to the market, so it made it reason to be a buyer for at least a very short-term period of time. And I had noted on the blog with about, I think, 45 minutes or so to go that it looked like the market was attempting a rally, in particular in the NASDAQ 100, because we had seen this big volume in here, and it was right up along that daily VWAP. It got pretty choppy in here, but then it finally did. The buyers did come back in with the heavier volume and push it above that daily VWAP after this nice decline in here. And I say nice from a short selling standpoint. Not that I'm a cheerleader for the downside, so don't misunderstand. But we did see a lower low in the NASDAQ. Today it came with lighter volume than the last test. Some people look at that as encouraging. I say jury's still out. On the 2-day time frame, we're right at this 2-day VWAP basically in the NASDAQ, and we've also got this trend line that it came right up to here at the end of the day. So if you're looking to trade these things long here at the end of the day and that sort of thing, you have to be aware of these other potential levels where there might be the market might encounter selling. Sometimes it's trend lines, sometimes it's moving averages, sometimes it's Fibonacci, but we still have, even here in this 5-minute time frame, you can see a clear pattern of lower highs and lower lows. So as powerful as that little rally was, and as good at $1 in about 30 minutes, 25 minutes, you still have to respect the fact that we remain in a primary downtrend. Nothing has changed as far as this daily picture goes in the ugly nature to it. On the 30-minute time frame, again, we've got this level in here. A lot of times when the market makes a marginal new low, it will then rally for maybe a couple days or so, but we're clearly still not out of the woods yet. You still have to be very, very defensive in this environment.